This is Lawrence Fletcher, hedge fund correspondent at Reuters, talking to Tom Caddick, portfolio manager at LV Asset Management. Tom, can you tell us about the outlook for the fourth quarter, how you see things developing?
Yeah, sure. I think it's clear that we'll see continuation of bad news coming through economically and through company results. That's not to say that everything is bleak. We'll get more granularity on how effective liquidity packages have been from central governments. Clearly having some effect on markets so far. Trying to predict days ahead, let alone weeks ahead at the moment, is nigh on impossible. So really it's just a case of keeping a level head and trying to make rational decisions in the face of irrational market behaviour at the moment. So for the rest of the year I think we can see continuation of difficult market conditions, but with opportunity.
And what is the long-term opportunity? If someone was looking to buy on a, say, 5-year view or longer, how does this compare now?
Yeah. Clearly it's always easy to say when the market's falling your opportunity is increasing and that your risk-reward trade-off increases the further you fall. But I think taking a long-term view, which is absolutely necessary when investing in equity or equity-related products, or market-related products generally, it is true to say that this is a once-in-a-generation opportunity to invest. That's not to say we are currently at the bottom at all, but it is saying that taking a long-term view, the irrational trade sell-off that we've seen in markets, the panic selling, creates these opportunities. And if you can take a long-term view, then it's a fantastic opportunity.
Right. And can you tell us how your portfolio is positioned at the moment, maybe in terms of your equity positioning and also corporate bonds as well?
Sure. We've been overweight cash and fixed interest throughout the year, marginally overweight, and we have been investing into weakness. Over the last 2 weeks, as we saw the market come off severely, we invested into that opportunity, really taking on board what I said earlier, which is that when the market behaves so irrationally, the trade-off grows in attractiveness. So we invested into equities during that period to move broadly neutral equities. If we strip out emerging markets where we are significantly underweight, but we invested into developed markets. We have an overweight in US equities, which pretty much trades off a negative or an underweight in the UK. We are marginally overweight Europe now, and we've taken that position fairly recently. Marginally overweight the Far East ex-Japan and broadly neutral Japan.
Right, that's great. Tom Caddick, thank you very much.
Thanks.